Hello and good morning, everyone. Welcome to this webinar series that the Invest Hong Kong and FinTech Association of Hong Kong are collaborating. We are very excited to kick off on a topic that is so top of mind for a lot of you that are tuning in today. It's on WealthTech and robo-advisory in particular. We are also very pleased to have assembled really a rock star panel of different front runners in the space, leading in the space, as well as representatives from large financial institutions. So you can expect a really vibrant dialogue in this 1 hour. But before we actually kick into action, I would like to introduce King Leung, who is the head of FinTech and Invest Hong Kong, to say a few words about the ecosystem here and to welcome this webinar. Over to you, King.
Thanks a lot, Helene. Hello, everyone. This is King Leung with Invest Hong Kong. Now, before I go into some of the slides, which I think some of you who have been working in Hong Kong are quite familiar with, I just want to sort of kick off this sharing with a few key thoughts. Now, first of all, it has been a long journey for us to come to where we are today. And essentially, when we look at, I think, where we started, probably back around 2013, 2014, so it was a pretty small community. And by now, we have a much more sizable community in FinTech. And if someone asks us, actually a lot of folks from overseas ask us, so who are the pioneers in the FinTech space in Hong Kong? Of course, there are some of the low-hanging fruits, like the payment segments have been thriving and doing quite well. But if we have to really pinpoint a segment within FinTech that's seen some great early adopters, early pioneers, in which by now, after like 5-6 years, they've already grown to a very sizable scale and also with great recognition around the region, that will be WealthTech. So that's why we feel that it's important that for those who are not familiar with the WealthTech space in Hong Kong, we just feel that between the FinTech Association and us, we feel we need to celebrate and actually get the wider audience to know who are the leaders who have been working tirelessly, to push the WealthTech agenda forward for Hong Kong and also regionally. Now, so this is why we are so excited to have this opportunity to basically share with you all this amazing experience by these folks. Now, again, we've prepared some slides, but I don't want to go into a lot of details. I'll just probably touch on a few, and then I'll hand it over to Helene. So perhaps we can have one more, another, okay. Now, so I think many of you might have seen this slide already. So we oftentimes would talk about the size of the ecosystem, over 600, the 53% companies or the 51% companies using Hong Kong as a base to expand internationally and also in the GBA. Now, but one thing that I would like to highlight is really the number 76%. And that is really something that is quite important because as you may find out from the panelists today, actually the B2B space in Hong Kong has been gaining some very good traction. Because obviously leading by some of the pioneering companies that are really trying to, get the corporate side to adopt the great technologies. So 76% of the companies operating in Hong Kong are actually very much engaged into the B2B space. Now, at the same time, obviously, when you already try to go down the path of trying to promote the B2B solutions, now oftentimes, particularly for a more innovative technology in which the corporate side are still kind of skeptical, well, does it work or not? Then oftentimes there might be another track in which the FinTech will take on the B2C routes in a way to almost like prove to the B2B clients that it actually works, and then they're getting traction from B2C side, and then going back to the B2B clients and say, look, this is already getting traction, and that can basically speed up that whole, I would say, experience to gain the traction from the corporate sides. And our guest today will share with you about that journey and strategy. So next slide, please. Okay, so again, this is a slide that we often use that talk about the size of the ecosystem. I don't want to go into a lot of details, but at the end of the day, it's fair to say that despite the modest population in Hong Kong, the B2B side of the ecosystem is quite rich. At the same time, particularly for the space in which we are talking about the cross-border liquidity, capital markets side. This is really playing to the strength of Hong Kong. Okay, next slide, please. Now, fundraising, we've been gaining some great momentum. And from the Hong Kong government side, we are also doubling down to try to attract more VCs to really push up the private VC investment. Essentially, over the past 6 years, $1.5 billion have been invested into Hong Kong. And then the Hong Kong government is fully aware of the importance of having a vibrant private investment community. So this is something that you should hear from us with new initiatives very soon in terms of getting more investors into this space. Now, professional services, in terms of talents, goes without saying, the FinTech space is all about the Fin and the Tech. And the Fin side, we just basically have a very deep bench of talents. Next slide, please. Again, the GBA, I would not talk talk too much about it, but there's just so much being discussed already. It's fair to say that from government perspective, we're actually working very closely with our peers across the border, the Shenzhen, the Guangzhou of the world, in terms of some of the measures that basically allowed us to put this into action. Next slide, please. Government schemes, I just want to maybe highlight a little bit about the importance that, so let's just say that during this conversation and after hearing from the experts from different WealthTech companies, and you decide that, well, maybe we want to fast track that whole process. Of course, besides the private investor side, please come talk to us, because we basically have been working with different government bureaus and departments to map out the various pockets of funding. So sometimes I think for folks in the private sector side, it may seem to be a bit confusing. There's just so many of them. But then we at Invest Hong Kong, the FinTech team, have gone through that process to try to figure out what are the schemes that are applicable to FinTech. So come talk to us, and we'll basically guide you through who to talk to and in getting this kind of government subsidies. Next slide, please. So last but not least is about the FinTech Week. So for those of you who are not been able to sort of follow some of the latest news from us, we just kicked off this fast track program, and that's intended to offer to both the local FinTechs as well as the international FinTechs. And the idea is to invite everyone with great solutions and great capabilities, and then we'll match you with the corporate clients, from the Hong Kong MA, Hong Kong Stock Exchange, and the various banks, insurance companies, and so on. We also would match you with the investors. Now, and last but not least, the whole process will start from now until October, and then it'll be concluded during the Hong Kong FinTech Week, during the 2nd through the 6th of November. So this is going to be 100% virtual. So so follow us on the FinTechHK LinkedIn page, or if anything unclear, please drop me an email, find me on LinkedIn. I'm happy to provide more information to you. So with that, I would just turn it over to Helene to start kick off this amazing sharing by our experts. Okay, thank you very much.
Thank you, King. It's really an honor for the FinTech Association and myself as the General Manager of the association to be moderating this panel of real experts. Apart from King, we do have with us a gathering of experts across the WealthTech and robo-advisory space. So I'd like to introduce them one by one, and actually in our discussion, we'll pick up on a few of the points that King was actually mentioning before. So in no particular order, but alphabetical order of the first name. So let's start with Julian Schillinger, who is the founder, co-founder, and CEO of Privé Technology. Julian, say a few words to our audience.
Yeah, hi, thanks so much for having me on the panel. As you already said, I'm the co-founder of Privé Technologies. We are a B2B WealthTech company operating in Hong Kong and globally since 2011.
Thank you, Julian. And next up, we have Shih, who is the Chief Marketing Guru at AQUMON.
I only wish I was the guru. Hi, my name is Shih. I head up sales and marketing at AQUMON. We're a Hong Kong-based fintech firm with a focus on robo-advisory, serving both B2B and also B2C customers.
Thank you, Ken. And next up, we have Mathieu Forcioli from Moonfare. I'm so sorry, Matthew. I always struggle with Italian names.
That's no problem. Hi, everybody. My name is Mathieu Forcioli. I'm the head of Asia Pacific for Moonfare. Moonfare is a Berlin-based platform that offers high net worth individuals to invest in private equity funds.
Thank you, Matthew. And over to Medhy Souidi, who is the Chief of FinTech at DBS. Medhy.
Hi everyone, my name is Medhy. I'm working for DBS where I'm in charge of the acceleration program. It's how we collaborate with startups. So basically, I try to source the problem of DBS, try to externalize the needs with startups and pay for projects. So we collaborate for a couple of weeks. I'm also a member of the FinTech Association. Nice to be here. Thank you.
Thank you, Medhy. Now, we got a range of experts here, you know, B2B, B2C, financial services, and FinTech. I'd like to start off with a question that I think is really on my mind, I'm sure on the audience mind as well. COVID, you know, COVID-19, how has that accelerated your businesses? And from a B2B as well as a B2C perspective, and what have you noticed to be the key drivers behind it, and how do you see it going forward? Maybe we start with Julian.
Yeah, hi. I think COVID-19, obviously, as unfortunate it is for the global economy and for people's lives, I think for the FinTech sector and the WealthTech sector specifically, it had a number of very good accelerating aspects to it. When we've been speaking to financial institutions, let's say to insurance companies, to banks a couple of years ago, getting digital was absolutely on their agenda and it was already a priority. But now there's much more pressure on that, because I think if you look at where financial institutions can spend, they have a certain amount of funding available, and a certain amount goes in offline sales, a certain amount goes in branches, a certain amount goes in marketing, and a certain amount goes in digital initiatives. Now, obviously, the whole business case for branches and so on, and having the same amount of branches has massively changed. The business case for hiring more offline relationship managers, investment consultants has changed. They can no longer meet, but clearly there's much more focus on how to sell digitally and how to engage the clients digitally and how to service them better in a more automated fashion. So I would say that this accelerated everything by 3 years, and I think it's very exciting times to be in the space.
Wow. Accelerated everything by 3 years. That's, you know, that's very interesting, Julian. Could I just turn for a moment to Medhy from a bank, from a financial institution perspective? Are you seeing the same kind of, you know, momentum, you know, fast pace at DBS?
Yes, correctly. So it will depend on the business needs. Basically, some of the projects were on hold because, you know, the teams has to restructure a bit their priority, and they need still to deliver the services as usual. So the bigger thing is how you can continue to engage with your different clients, even virtually and not in the retail estate, the retail bank. So the thing that I had for myself is like we double in less than 6 months the number of projects we've done. So we have delivered more than 20 projects, mostly related to AI and machine learning. So how to catch the data, how to structure the data, even if it's unstructured, because you have different sources of data from media, newspaper, you can have from different kind of financial reports to see what happened to you or corporate clients, but also high net worth clients, and how we can treat that data, how we can make the analysis of this one and find the core information that you need to have, because when we speak about wealth as well is hyper personalization, what is really important for your client. So in terms of how we can treat that information, we had, I think, with risk management and credit, more than 5 projects done between March and July, where some of them were totally, you know, accepted by the bank, had a big value for the bank, and we onboard the solution with us. So in terms of experimentation, it was more focusing on data, how to treat the data, also how we can improve the customer journey for the client, how we can onboard them on the phone in less than 10 minutes, because we have also the competition from virtual banks who came during the COVID-19 and you know, it's quite easy to onboard on the phone, do your open your account with your Hong Kong ID, with your proof of address, with a picture or selfie, and also do some deposit there. So it was all the projects that we have. And from last year, where we did 12 projects in 1 year, this year we did a 19, 20 in less than 6 months. So kind of a fast track for us.
Yeah, thank you, Medhy. So what is the scene looking like? Let me turn to Ken, who is more on the B2C, business of this sector. Ken, what you
Yeah,
see
sure, no
momentum?
problem. Yeah, actually, I would say I really echo what particularly Julian and Medhy was saying earlier. Actually, the speed in terms of, let's just say for our existing B2B clients who are about to launch products, I think that has really put a lot of pressure on them to try to launch quicker. Obviously, I think given the market climate, they also have to take that into account. But I think particularly beyond existing pipeline, actually new inquiries, particularly with a lot of virtual banks, I think this has really speed up the process throughout the entire COVID period. But I think a big part of the equation beyond just COVID actually is the economic downturn, right? So everyone's thinking about how can I service more people, but at lower costs. And I think that's really like the big value add for WealthTech is, if I think in terms of black and white numbers, that is very clear, right? But I think what Medhy mentioned earlier is just that this is a wonderful opportunity for everyone to reimagine how to service your clients. And it's not just using a different platform, but in terms of how you engage and service your clients. But on the B2C side as well, actually, every time we have been forced to go home, work from home, actually, we have seen our business really, I would say, grow significantly. I mean, just to give some numbers. So the last half of 2019 versus the first half of 2020, we've seen basically about a 250 to 300% increase in account openings and new under asset management for us on the B2C side. And just if I look at the first month and a half into right now, into like basically July and now into August, we basically made up 60% of account openings for the first half versus just a month and a half that we've been through. So we see every time that everyone has to go back home, actually most consumers right now are very, very open to trying new brands in this environment. I think I read some statistics that 1 in 3 consumers are willing to try brands that they had previously were not familiar with. So I think that's actually been very, very positive, particularly for the WealthTech space.
Yeah, thank you, Ken. We are definitely observing a very similar kind of momentum. It's almost frightening in a way how fast, things are compressed to happen within such a short time. Now, I'd like to turn to Mathieu because you are sort of like sitting between the B2B and the B2C. Are you seeing similar trends, Mathieu?
Yeah, no, absolutely. We whether it's on the B2B side where we get much more inquiries into using a solution, but just to echo what Ken was just saying, what's interesting as well is that the users themselves are getting used to using online sort of products. Take something like a webinar. How many people were attending webinars a year ago? I don't think that many people were attending webinars. And this is changing also more rapidly the behaviors of people. And in the WealthTech space, one of the main issues we have to deal with is trust. And people are getting used to using new products, new features online. That's building trust in the system. And that's also bringing traffic and therefore bringing more subscriptions, more users. So it's really been a combination of more adoption and faster adoption. People are getting used to it, and B2B realizing that they have to have and they have to accelerate their digitalization.
Yeah. Thank you so much, Mathieu. We definitely concur with that. I'd like to turn for a moment around B2B versus B2C. Because we are seeing actually most of the fintechs in Hong Kong operate on a B2B kind of scale, or the majority of them. And we got experts here that really straddle both both verticals. Maybe Julian, could you share with us your journey, Privé, and from the B2B aspect, why did you pick on it, and what other insights do you share with us on the B2B and the B2C?
Yeah, so there's a lot of background stories. So when we first just were thinking about doing the company, I had a conversation with my back then girlfriend, now it's my wife, and she's from Hong Kong. And I explained to her sort of the concept of a robo-advisor. And that was basically before the term robo-advisor was actually coined. And basically I said to her, look, you could put in your money and it invests itself automatically, and you can see all the reports on your mobile phone and everything. And she said, well, where would be my money? And I said, well, yeah, it would be then with Privé, or back then what was the working name of Privé. She said, well, unless you called HSBC, I ain't gonna get my money. So she was very clear that, and at that point, I think that drives sort of to the pivotal point. If you want people to invest money with you, you need to build up some sort of a brand name. I think with the millennials and now through COVID, we get more comfortable with digital. They also start having more trust in the regulators doing the right thing. But at least nearly 10 years ago, it was still very much brand name driven. So, and that goes to the point of the difference of the two business models. In both cases, you need to have great tech. But in one case, the second component you need is great marketing, great brand building, and great outreach. This is in the B2B case, you need to have great delivery capabilities, because you can have the best piece of technology, but it's not like a bank like a HSBC or a Citibank that come and swipe the credit card and just book your service. That in the enterprise B2B space, you need to be able to make sure that whatever you have to deliver, these building blocks which you provide, that they fit for the client and that they get adopted well. So tech is the common denominator, but the other piece of the business to make it successful is fundamentally different between B2B and B2C.
Thank you so much, Julian. That's a very interesting story behind the establishment of Privé. And look where it has taken you now, in the whole robo-advisory space. So, kudos to that. I'd like to turn for a minute to the financial institution person on the panel, Medhy. How do you see this? Is DBS investing or partnering more with the B2B or the B2Cs? Any preferences, and if so, why?
Yeah, so if we want to discuss about how the banking services are evolving, like since more than 10 years, you have access to everything on Prime. And it's really interesting. You can have access to movies directly on your TV with Netflix and choose the last movies that you want to watch. You can do it with the music, with Spotify. You can do it with Alibaba and Amazon and have the same day delivery. Everything is quite crazy right now. People have no patience. If the user experience is quite long for them, they won't continue to engage with your application. So for example, if you onboard a new client on your phone, and it depends on the solution, if you are doing it on in-house or you are using external vendors, if the solution takes more than 5 minutes, you have a high rate of giving up. So people won't continue to open their account with you, or they won't continue to do their investment with you. So how, from this best practice from Netflix, Google, Amazon, Alibaba, can we apply it to the bank? This is the mission that we have. And also another thing that everyone knows, but we don't say enough, it's using an app, a banking app is not like using WhatsApp, Facebook, or social media. You don't go every day on your banking app, except if you have to make a transfer every day to someone. But especially right now, what you want is an easy way to invest, to know what is the best product, how you can work with institutional to at least save your money and don't lose too much. And what we have seen on the market right now with the virtual banks is there's a big play on deposit, time deposit. How to give like 5% return in 3 months. So we have seen that with Zhong'an, we have seen that with WeLab, and now we have like more and more virtual banks coming on the market. So for us this year, everything is at how we can co-work and co-create with startups to deliver the best customer experience, but also try to understand from the core what wants our clients. Because as we discussed with the previous speakers, Julian, Ken, and Mathieu, it's how we can have the core needs of the client, how we can understand it before the client wants it. For example, if you go to IKEA and you buy a sofa, it would be great if when you buy it, you receive a message directly on your phone to say, oh, you just buy a sofa. Do you want to buy an insurance to protect it for 3 years? It can be the same with a motorbike, with a car, but also can be the same with our financial assets. So this is a big game that we are trying to play with gamification internally, but also with external parties, and how we can make wealth more fun and also, wealth for masses, for everyone's.
Thank you so much, Medhy. That's very interesting perspective. Now, we do have a few interesting questions coming from the audience, but I'd like to finish the round with the panelists first before we deal with the questions from the audience. Mathieu, what is your take on this, given that you were sort of like, you know, on the cusp of both B2B and B2C?
Yeah, we are, that's right. Yeah, we run a B2C platform, so investors can sign up directly onto our platform, and you know, provided that they're qualified investors, that they can start buying private equity funds directly. And we also have a B2B business. I mean, for us, it's been very clear, the strategy and the journey forwards, to echo what Julian was saying, is our B2B business. If we want to grow our assets under management significantly, we need to work with the B2B for one simple reason, which is what Julian was saying, which is, again, trust. Most of these financial institutions have been working with their clients for years, if not decades. And the clients are not going to change from one day to the next to a company that they've barely heard of. So the B2B for us is critical in terms of eventually growing our assets. But B2C is very important for us to make sure we design the right product and the right customer experience. And because we get direct feedback, we get direct feedback when clients are happy, we get direct feedback when clients are not happy. And we can also then develop on the back of that also tools mining the data that we have on customers, and eventually these tools we will be able to use them for our B2B customers as well. But we do, if you want, a first trial on our B2C platform. So the two are very, very important for us, the B2C to develop our products and make it better and better, and the B2B to eventually grow much more significantly our assets under management.
Thank you, Mathieu. I think you all hit the nail on the head in terms of this B2C and B2B divide. There's a very interesting question from the audience that I would like each of the panelists to perhaps share their insights on that. I think Julian mentioned when he chose the B2B formula for Privé that trust or building trust is critical in any wealth tech solutions. So the audience question from Max is, how do you actually build trust? And also, how do you actually use that to influence your customers' investment behaviors? Perhaps we start with Ken. Ken, I think you're on mute.
Okay, all right, thank you. Sorry, thank you for the reminder, and thank you very much for your question, Max. I think at the end of the day, I think we need to get back to the basics, is that, do you understand people? I think a lot of the points that Julian mentioned about building trust with people, actually that has nothing to do with technology, is that, do you understand fundamentally what drives people? So in the case of Max's question of trying to see if we can change people from going from traditional RMs to being more like self-help, I think you first need to understand the Hong Kong market is actually very different from overseas markets. Like, we do a lot of focus groups with a lot of Hong Kong investors or people with different age groups. And we find, particularly with a lot of millennial demographic in Hong Kong, they don't act like millennials like overseas. I mean, I jokingly say they actually almost act much older than their age, much more conservative. Actually, we find on our platform, even though we have a lot of people that use our app that are, I would say, the 20 to 30-year-old range, but actually the people that are the easiest, I think, to adopt our strategy actually has been the people, I would say, 30 to 35. And part of that is actually a change in their overall mindset, where they're actually seeking out these needs. Because as we know, the number one thing in terms of, let's say, from a sales perspective, is you shouldn't have to try to convert people. Trying to convert people, you're going to lose 9 out of 10 times. But actually trying to just find people who are looking for your service, that to me is the more effective way to try to engage your clients. So although we do a lot of educational outreach, I got to be very honest that my objective for educational outreach is more in terms of branding and less in terms of trying to change their behavior, because truth be told, from that perspective, I don't think is particularly that effective. But I think if you are able to find the target groups that are looking for these type of services, that to me makes much more sense in trying to change behavior.
Yeah, And also, if you don't mind me to add to this, I think an important factor is also what we see many financial institutions now start to partner with non-financial brands which clients already trust. For example, we have the partnership with Samsung Electronics, where we are that gateway between all the mobile phones and traditional financial institutions, so they can reach their clients and they can service their clients without them having to install the app. So that's sort of how you can tie up these other big brands. And I think in sort of that platform ecosystem where we're going in, I think you will increasingly start relying on your own brand if you have the right distribution partners for effective outreach.
Yeah. Maybe just an extra point is the trust factor is something that we deal on the B2C side every single day. And I think that's why you also see a lot of wealth tech firms, particularly like, let's say, Julian, who do also do B2B2C, right? So you're servicing financial planners that actually service their clients, because obviously trying to go directly to the client is obviously very tough because they don't know who you are, they've never heard your brand, but they already have someone that they trust. So it's think about how to empower also the middleman as well to also service them better, so ultimately the end users can also benefit.
Yes, absolutely. I think those are great insights shared by both Ken and Julian. Can we just turn to both Mathieu and Medhy for their perspectives on this as well, on trust building, which is really the common currency for wealth management, right?
Yeah, sure. I mean, for us, we have to deal with two aspects. Number one is we have to build trust in Moonfare, and people have to effectively know your name, which is very common to everybody here on this panel. And so, I just echo what has been said. One of the main things we do is we associate ourselves with some of the brand names in the private equity space, and some of the funds we've had on the platform are very, very well-known wealth managers, and that has helped us sort of build our credibility, because these well-known private equity managers wouldn't work with us if we were not serious. The second way we've been building trust in Moonfare and in the brand is by leveraging our community of investors. We've heavily encouraged referrals, because there's no better way to acquire customers than if they've heard about you from someone else than you. And that has been a key driver for us in bringing additional customers. The other aspect that we have to deal with when it comes to our particular business is that people are not necessarily familiar with the asset class itself, and people don't necessarily understand that well private equity in general. And so we put a lot of efforts also on education. We run webinars for our clients on the topic. We publish white papers or specialist articles, and people can read and educate themselves in order to eventually start investing in the asset class. So that's how we address it on our side.
Yeah, thank you, Mathieu. Turning to Medhy, trust building for a big financial institution could be a little bit different from a fintech service provider. So what's your take on this?
I also work in startups before, so there's maybe 2 points I can supplement here based on the feedback that we had from our three speakers. The first one is why people like fintech and why there is that kind of huge attraction for this one. It's because of transparency. All these companies came here to give you transparency about the cost, about the workflow, about the process, and give you a better user experience. So when you have the transparency, you know where the money goes, and also how much you can be charged for the different fees and services that you apply. So this is the first maybe layer for transparency and trust for a couple of companies, more on B2C side, but also on B2B. Second one is also regulation. We have a rule of sets, and company like Privé, AQUMON, and Moonfare are licensed. Like there is a SFC-HK in Hong Kong, they are overseeing all the activities in financial services. And by being regulated, you give to people a minimum set of standards. And they can understand what are the risks and what are the rules. That's why maybe it's easier to work with company giving access to wealth more than working with company giving access to cryptocurrency where there is no regulation yet or clear regulation for everyone. So I think those two vectors here are really important for end customer and corporate as well. The third one is how you can work also and collaborate for me with startups is to work on a proof of concept or to work with a manual available project MVP. So how we can try something and have at the end the outcomes that we want, and also understand the risk. So it's still a way of risk management that need to be understood by the banker, by the teams inside the bank, but also by the customers. Because at the end of what we deliver, it's services for clients. So they need to have the trust on you, you need to have trust on your partners, and you need to co-create together a really healthy solutions for everyone.
Yeah. Thank you so much, Medhy. I think great insights from everyone. I want to remind all the participants, you can freely type in your questions. We'll be able to see them and answer them as we go along with our discussion. Now, I'd like to turn for a moment away from the B2B, B2C, but to the cost to serve, actually, because wealth tech is an area where there's increasing need for personalization. And if your customers demand greater and greater needs to be served in a personalized manner, it has real implications on your model and on your costs to delivery. So maybe can I turn to Julian? In terms of Privé's perspectives and the B2B perspective, how do you see this going forward and optimizing your cost to serve?
Yeah, absolutely. So I think the keyword here is mass personalization, right? So personalization always happened in the financial industry. I think the thing which starts to change is at what level of wealth becomes available through you, because the cost of producing personalization is being significantly lowered through technologies from providers like us, or also AQUMON. So the basic question is, historically, if you were super high net worth, let's say 100 million US dollar plus in wealth, you probably could speak to somebody who really knew finance inside out and could really help you to construct a portfolio and a protection insurance and many other things which are really tailored for you. Now, that level, the lower you go, even at 5 million US dollar, many private banks are not even going to take you. So that may sound a lot to have 5 million US dollar, but when it comes to financial wealth, this may not be that terribly much. So as a result of that, that level could only come down further through the provision through digital tools. Like, for example, we use artificial intelligence to build a portfolio which is taking the bank's intelligence, like asset class outlooks and so on. At the same time, it's also looking at the personal circumstances, because every person is different. And that's bringing down that mass personalization level to very small amounts of money, like 10,000 US dollar, you can get these services. The other part which comes in here is also the application of fractional shares. So many markets in the world, companies like us help financial institutions to offer fractional shares. So you can have a portfolio like a very rich person built of stocks and bonds, but also available at much smaller minimums. So that is really changing. And if you look at, this is a great development because it's good for the financial institutions. They bring a better service at a lower cost to more people. It's good for the consumers because they get for less fees or the same amount of fees a better service. And it's also good for providers like us who ultimately can sell and provide their technology solutions. So it's one of these rare times where you have a win-win-win situation.
That's a great insight, Julian. I think it helps to democratize the kind of offering across the whole spectrum of wealth ownership. From the ultra high net worth to really your regular kind of mass affluent people out on Main Street, really. So can I turn to Ken for a moment? How do you see this mapping out for AQUMON, given the fact that you really are into the mass adoption, and how does mass personalization impact AQUMON's business model?
Yeah, sure. So I also came from a very much wealth management private banking background, so I knew Mathieu before from our UBS days, and I'm pretty familiar with the guy. But I think at the end of the day, particularly if we talk purely just the Hong Kong market, I think it's pretty much a numbers game, right? I mean, it's very clear that, in terms of just high net worth clients, we're looking at maybe 150,000, maybe closing in on 200,000 in Hong Kong. But actually client facing like RMs and let's say investment staff, where it's not even over 3,000. So you can already do the math in terms of what the ratio is. And so traditionally at a private bank, chances are you'll be offering some long-term stable offerings that are more, I would say, core solutions that most private banks would offer their clients. And I think as a wealth tech firm, what we can already offer is, I would say, similar, if not better, risk-adjusted performance core solutions for their end clients at pretty much, I would say, 1/10 or more of the or less of the cost. So for a lot of I would say wealth management platforms are looking to really expand their footprint, but thinking about also at a relatively lower cost. I think that to me is pretty much a black and white solution, because as we grow, particularly as we grow into maybe, let's say, the Wealth Connect, and we go from 7 million population to 70 million population, I mean, there's no way to scale up because there's clearly a very large talent gap here in Hong Kong. So the technology element of it will be something that I think a lot of people will be exploring.
Yeah, thank you, Ken. I think you hit the nail on the head there. Can I turn to Medhy for a moment to get his perspectives on this, given the fact that he has worked on both sides of the fence? You know, most of us have, but I think Medhy probably has a sort of like, you know, very top of mind perspective to share on this. Medhy.
So the question is about talents, right? So what we see in Hong Kong is many really good universities. We have a ratio of excellent universities that's just incredible. And one of the big focus that we saw here, it's machine learning and data, how to make analysis of data, computer science. I think there is a lot of talent there. A couple of years ago, it was kind of difficult, and maybe it's still kind of difficult to recruit really have a kind of a really good pool of talents, not only in Hong Kong, but also in Shenzhen and Guangzhou. And from a perspective, when I work with startups, I see a lot of startups focusing on natural language processing, machine learning, big data. And all those companies has the capabilities to work with banks because there is a big differentiation between the gap of talent in a bank focusing on data and the gap of talent that you have, or the pool of talent that you have on startups in Cyberport, Hong Kong STP, or universities working with us and helping us to understand the process of, trim the data, structure the data, and different models that we can run to have the better analysis and the better use of this data, because only one model cannot work every time. You need to have at least maybe 20 to 25 different models on the platform. So for me, I'm really, really interested on all those talent. I've seen more and more banks recruiting data scientists. Even company like South China Morning Post have a team of data scientists, other companies as well. So it's kind of really interesting to see that maybe in terms of developers, we don't have enough here in Hong Kong, but maybe in terms of data scientists, right now in a couple of years, we will have enough.
Yeah. Thank you so much, Medhy. Thank you. Very interesting perspectives indeed. How does it work in Moonfare, in your perspectives, Mathieu, the cost, mass personalization and all that?
Yeah. So our positioning is a little bit different in the sense that today we're targeting an issue which is an issue of access. If you're a high net worth individual today, it's complicated to access the private equity asset class. And so we leverage effectively a concept that Julian was mentioning earlier, is that we are fractionalizing investments into private equity funds in order to make it accessible to people. So it's a little bit of a different concept, but the technology is here to help make this fractionalization cheaper. If you want to invest in private equity, normally the minimum ticket size to access any of these funds is $5 or $10 million US, which is beyond the mean of most individuals. We're bringing this down significantly, and we can only do this because we use technology to reduce cost significantly. The personalization aspect is probably going to come next for us. Really, what we're solving today is the access and the ease of investing in private equity.
Yeah, thank you so much. I think for private equity, that asset class probably, it's like a unique niche that you are playing in. There's the next question from the audience that actually touches upon your customer segmentation. Do you actually serve the millennials or the younger generation? Are they very different? Do you require a different strategy to approach them? I know Ken mentioned a little bit about how they seem to be more mature here than overseas, but I'd like to pick your brains, all of you, on do you actually make a difference in terms of serving that particular younger client segment? Maybe we start with Ken.
Yeah, sure. We we do. I think actually what's very interesting from when we did a lot of like focus group type research with our younger demographic, there's a way sometimes I feel like I would describe, our firm is driven purely by young people. So I think our average age here is 26, 27. I am the dinosaur here at 41 officially. But I think with younger people, ultimately, a lot of times when I think from a B2B perspective, a lot of big banks that approach us and they think about offering our robo service to their end clients, thinking that, oh, younger people are looking for robo type offerings. But at the end of the day, I feel young people just want things that work. It's nothing to do with the gimmick of it or not. And I hope, obviously, when I look ahead that maybe a few years from now, we won't be talking about robo-advisor or not robo-advisor. It'll just be in our lexicon that this just is something that I do to manage my wealth, right? There's no definition in terms of what it is. But in terms of, I think for a lot of B2C type companies like ourselves, the client segmentation is very important for a few different reasons. One is in terms of when we are truly trying to reach out to the end user, if my overall client profile isn't clear, my overall marketing sales effort will be greatly stunted in a negative way. And also thinking about in terms of our overall business model as well, is thinking about how can we serve our customers better? They have different needs. So that's why for every segment, we will be obviously always interviewing our clients, serving our clients to figure out what exactly they need. And we're actually further segmenting our platform by the end of the year by offering maybe, I would say, a little bit more sophisticated type tools for some of our slightly larger clients that feedback to us that maybe they're not just looking for global asset allocation type long-term stable type offerings. They're also looking for things that are a little bit more active in terms of investment strategies. And this will also ultimately benefit our clients and also benefit us because actually for a lot of robos, it's pretty much an AUM game. And as long as we can tap into people, I would say maybe mass affluent versus the pure retail, that's also going to improve the sustainability for our business as well.
Yeah, thank you, Ken. I'm sure the AUM game is are the same for the B2B players as well. So Julian, in terms of the whole millennials or non-millennials, the younger versus the more mature, any perspectives from your, from where you are?
No, absolutely. I do think that the millennials, they're very focused on the fact that things are purely digital, and they grew up in a world where they had Facebook, their Instagram, everything was available digital first. So now that's also what they expect from the financial institutions. And I think the financial industry had it sort of a bit too good for too long, and they didn't really feel the pressure to catch up yet. So historically, if you looked at financial investments in technology in financial institutions, it was always around the back end. It was the core banking system. It was to do with risk management and these kind of aspects, which are all very important. But now what we see is that whole focus is driven on the front end. And I do not believe actually that millennials are that fundamentally different in terms of what they want from a financial institution, except the fact they want it to be digital first and still want to speak to people, but only when required, not the other. And that's really what we see happening.
Yeah, thank you, Julian. I think you hit the nail on the head when you said that, millennials are not that different, but they are digital natives. Whereas most people are digital nomads. So we got to learn digital, but they grew up digital. So what do you mean having a person, having an RM, and so on? Now, how does that impact the banks? Who's really had it very good for very long, as Julian was saying. Medhy, how are the financial institutions putting on your banker's hat now?
So the thing is, habits change a lot over the past last 10 years, and for everyone's, for the younger generation and the older generation. But when we serve our client, we still need to segment them by target. So how do you want to serve them? So even my father is now using WhatsApp and everything, Instagram. So it's kind of good. But when you go to the retail, do we want to have all these services on the phone or on the computer, or sometimes he wants still to have someone that he can face to have the best services possible. So for mass market, for example, what is important is to decrease the cost, have transparency on where is going the money and the fees. For mass affluent is how the service can be. For example, those people are used to travel a lot with their jobs and they want integrated solution on one platform maybe, or making banking visible, how we can embed our solutions to different services, similar to Uber, Deliveroo, where you need just to use one application and the payment is quite straightforward. But for 8-net-worth individual or for SMEs, because we still have the corporate side, we still need to be really close to them to understand the needs, to see who they are, because what they want in the end is, of course, they want the performance, but they also want you to understand who they are and where they are in their life. If they have sons going to overseas to study, they need you to know about it before they need to tell you. You need to be like, directly on your mind. You need to be in his shoes. So, of course, we try always to increase the quality of our services to make it more digital. But for some people, they still want to have, or they still need to have someone in front of them in a retail bank or at least on the phone.
Yeah. Thank you so much, Medhy. I think it was a very valid points. That whole shift in mindset is worth offering from large financial institutions. We see that happening, every day. Mathieu, what about from the PE perspective, from the private equity perspective? Are you seeing any differentials between how you service the younger clients versus the more mature ones?
Yeah, no, absolutely. Very similar comments to what we just said. I mean, to some extent for us, the millennials, as you just said, or the younger generations are the easiest clients to serve because they're used to digital. But a big part of our clients, because we serve more high net worth people, tend to be a little bit older. And so really our focus is to accompany them through that digital journey. So we first make sure that we target them properly when we do advertising or whatever that is, but also converting them to using an online platform. In a pre-COVID world, we wouldn't hesitate to also do offline events, for example. So we would organize dinners with our clients, which becomes much more of a traditional private banking way of servicing clients, but that will allow to build this trust, build this sort of engagement with them. And what we see very often is that once they've done their first investment with us online, then the rest is online and the rest of the interaction is online, because we've accompanied them from a sort of a very traditional banking model into an online platform. So that's how we do it, and segmentation is obviously very important for us.
Yeah, thank you, Mathieu. Can I just turn very quickly to sort of like Julian's earlier point about partnering with Samsung, broadening the horizons of your ecosystem and building it out, which I think is very important for the next phase of growth for FinTech and WealthTech people. Julian, what are some of your thoughts in terms of building out the growth in the future, in the new normal post-COVID?
Yeah, I think it's a very interesting question. And I mean, basically what we see happening in the financial institution space is something which happened in many other industries many, many years ago. So if you look at the car industry, I can't help to use this as an example because I'm German, although so Tesla having all the limelight these days. But basically what happened in the car manufacturing industry, there was what we call a disintegration of the value chain. So historically, a car company would do anything from the windshield wiper to the rain sensor to the gearbox to maybe everything except the tires, pretty much. And sort of you have sort of a silo where all value contribution happens inside the silo, and it's being done internally. And what happened over the last 30 years is that the value chain has disintegrated. So there are a number of vendors like Bosch, Delphi, and at the same time, all the different cars sort of start increasingly being built of the same components. So VW Touareg and a Porsche Cayenne inside has pretty much similar components, but it just is a different coating. It's designed in a different way. So the car industry tries to focus on the last 10%, which differentiates their product from other products, rather than building a whole stack themselves. And now that starts to happening now with the financial institutions. So rather than saying, oh, I need to do all my product generation internally, I need to do all my advice internally, I need to look all my asset management internally, I need to do all my client outreach internally, they start to increasingly understand themselves as ecosystem players. So I think it's Barclays, they actually partnered up with TransferWise for global remittance. And the logic is sort of, I'd rather shoot myself in the leg than somebody else shoots me in the head. Because remittance is a big business for the banks, but offering a more attractive service is probably the right thing. So we see more and more of these partnerships are coming up, and sort of these banks see themselves also as a bank in a box where they lend out their services to other players or connect with other players like Samsung. So these are sort of the things we're seeing, and I think it's all driven by the regulator creating the environment for this to happen, open APIs. In Europe, you start being able to have transportable account numbers, so you can move them from one bank to another bank, and so that sort of lowers the barrier of the hurdle of switching, and at the same time, the consumers are much more informed. Because before, if I wanted 2 products from 2 different financial institutions, I had to go to 2 different branches in different parts of the town. Now it's basically only 2 apps on the phone, and in the future it will just be my assistant, my Wealth assistant, helping me to connect to the different institutions. So the switch cost is much lower for these reasons.
Yeah, thank you. I think it's very valid to say that you know, the whole landscape is really calls for more and more partnerships and working together in order to capture your client base, or for that to be, you know, sticky. Ken, what are some of your perspectives to what Julian was just saying as well about that whole building out that partnership platform?
Yeah, sure. So I think particularly for us, let's just say from a B2B side first, because right now we're mainly working with a number of retail banks here in Hong Kong, and we've also ventured actually into the insurance space as well, repackaging investment-linked products for all Hong Kong I would say end clients for, I would say, the largest insurer in Hong Kong. And so I think to me right now, I think an interesting point about that is thinking about actually something that Medhy touched on earlier, which is we talked a lot about how to capture clients, but actually we talked very little about the overall offering or product design. And I think that's something that people also, I mean, the beauty of a bank is that it's a one size fits all type offering. And the beauty of a wealth tech firm is we're able to target and service people who didn't actually fit that one size fits all type box. And I think that kind of plays in a little bit in terms of the target segmentation that you mentioned earlier, which is thinking about actually from the product design level, are you developing solutions that are actually helping those particular client segments? I think for us, at least when I think about this is I would say for a lot of our B2B clients, we're working very closely with them in regards to this, just because at the end of the day, sometimes as a robo-advisor or as a B2B offering, it's a lot of times you give them a solution, but I think kind of echoing what Mathieu was saying earlier, having the direct client experience also, I think, adds a very different aspect to your end offering, because you understand the end clients in some way, maybe a little bit better. And also in terms of also the way your thinking process behind it, in terms of designing a solution that people actually want, I think that is also something that, we put a lot of effort into.
Yeah, thank you, Ken. Can we turn really quickly to both Mathieu and Medhy before we have time for one last question from the audience that is actually very interesting. Mathieu?
Yeah, sure. I mean, I think I'll just echo a little bit what has been just said here. But we, partnership for us, as I said earlier, from a image building standpoint is very important. So that's why we built our B2B business, and for our B2C business, we also seek, I would say, to be associated with different brands. So again, I was mentioning earlier, we were doing, pre-COVID, we were doing sort of physical events with our clients, and we would sort of also build partnerships with other brands that are serving a similar type of clients, whether it's luxury brands or retail brands and so on. So, again, at the end of the day, we cannot make it alone, and we have all common goals. And when we do partner and each bring the right solution for the clients, then that's the win-win for everybody.
Thank you, Mathieu. Medhy, your quick thoughts, please.
Yes, so for DBS, what we are focusing is ecosystem. Ecosystem means how we can partner with non-institutional banking services. It can be healthcare, it can be travel, it can be logistic. And the thing is to see how we can become really invisible and embed our services with them. So instead of working only on financial institutions, we are working on different industry, and we try to extend our banking services and tech banking services to our partners and their users as well, to really have a different approach than traditional banking. So we don't have to have a front end every time. By using our API, we can connect as a dot with those guys and deliver the best experience that they can have.
Thank you, Medhy. The last question.
Sorry, maybe just a minor point.
Sure.
Is just thinking is that I think the Hong Kong market is quite unique in the sense that, overseas, when we think about a lot of fintechs or startups, I would say they're sometimes labeled as disruptors. But obviously in Hong Kong, I feel kind of touching on what Medhy is saying, beyond just partnership is, I think we're mainly looking as collaborators. I mean, Hong Kong is a very B2B driven market, right? I mean, it's very much geared towards larger financial institutions. So I think every player here, whether it's Mathieu, Julian, or even Medhy, I mean, I think everybody is, the key thing that everyone is thinking about, how can we work together to create something that's actually useful for our end users.
Very true, Ken. I think collaboration is like the new competitive advantage for all of us, whether you work for an FI or a fintech. The last question is really interesting, and it doesn't need to take long because I do realize that the time is coming up, although we could carry on talking like this forever. What's next for robo-advisory? What's next? And also, what is the technology that will deliver that next? Is it NLP, or is it AI? What is it? Julian?
Yeah. So first of all, I would limit the question to robo-advisor, like our company, we do wealth management in general. For robo is part of that, but also serve private banks, for example, to automate their people to a large extent. I think one aspect we discussed is the true mass personalization. But the question always is mass personalization and automated personalization is, where do you get the data from? I think today a lot of this still relies on the fact that people need to. Can you guys hear me? Because it seems to have frozen.
Yeah.
Personalization relies on the fact in their information about their personal lives. And we see a future being some ambient AI, as I would call it. It's basically the artificial intelligence you don't even see. So let's say you use your Samsung phone, you're buying diapers with Google Pay, you wake up in the middle of the night, you're hanging around a hospital, the future should be that your phone asks you and says, oh, it seems like you had a baby. Do you want to connect with your favorite or one of the insurance companies to look for the protection of your kids in the future, or connect to the financial institution? So it's that data aggregation which will happen much more on a non-explicit level to understand when is the right time to approach a client, and as a result, don't come across as like you're spamming him, you're trying to sell him something. You basically identify the need without him having to tell you. And that's already seen in other areas. So in the morning when I get up, Google Assistant already figured out that probably I'm going to work, and it tells me that there's a traffic jam on the way to work. So that's already happening, and I think that's something which we will see come very strongly in the wealth management space. And that call down, if you're able to engage your clients at the right point in time, that's the best outcome for them. That's the best outcome for the financial institution as well.
Yeah. Thank you, Julian. How about Ken? What's next for robo-advisory in the WealthTech space?
Okay, so I think maybe there's kind of two ways to look at this. The first, I think maybe if I would probably say in terms of technology-wise, I think for us maybe more like an AI type NLP approach. I mean, we don't technically touch on blockchain, but I think one thing that we're continually striving for, which is what Julian touched on, is to understand our clients better. I think right now on our platform, we do use AI, but more from an investment strategy standpoint, but I think we can use that better to get, I would say, better understanding of our clients so that we can service them better. And I can imagine NLP actually playing into that as well. But sometimes I feel maybe I come back to a rudimentary part of this question is, sometimes we're so focused on what technology is the game changer that maybe we don't ask is that maybe it's not just a technology. Right? It's really thinking about how can you solve a problem. And actually with our existing technology, as we've all seen since COVID, that we're all getting back to basics, is that actually there's already a lot of technology at hand that can service us. But the thing is, maybe it wasn't reimagined or used in that way that can actually solve our financial management needs problems. So I think that's something that maybe sometimes instead of wishing for the next technology, what to do, maybe we need to think about how can we be more resourceful with what we already have. And in terms of the next level, I mean, my thing is just thinking is that maybe hopefully in a few years' time, we won't be, you know, thinking about robo-advisory as a solution, right? I mean, much like how Uber redefined or redefined the entire like car hailing game, right? I mean, you don't think about it in car hailing anymore, you just call it Uber. So hopefully we would be in that type of lexicon where it's just a tool for you to manage your wealth better. And I mean, I know we're very far away from that, but I do feel that with a constant collaboration, both with the financial institutions and also fintech players like all of us, that maybe we can reach a middle ground where I think at the end of the day, their clients can be serviced better, it can be lower costs for the financial institutions, and you know, everyone benefits from this.
Yeah, thank you, Ken, for putting the human, you know, at the center of this. After all, technology should serve us, not the other way around. Matthew, some of your thoughts, please, on what's next.
Yeah, I mean, obviously us, we don't provide advisory, so we're not. It's a little bit different for us. We leave it to companies like Privé and so on to develop asset allocators and smart way of allocating, you know, your money. For us, the big focus is how can we reduce costs of operating. There's a lot of legal contracts and a lot of paperwork in our industry. It's you know, an industry that hasn't changed for the last 40 years. So I would guess that probably at some point, you know, blockchain will play a role in this. But I think it's going to take a while because the entire industry has to embrace it. You know, it's a good thing if you start implementing blockchain in your processes, but if at the end of the day, your counterparties on the other side are still using paperwork, you're sort of, you know, you're not really lowering your costs, you're increasing your costs. So over the long term for us is blockchain, but for now it's still, you know, very, very much the traditional way of doing things.
Great. Thank you so much, Matthew. And Medhy, to wrap things up.
Oh yeah, I think Julian and Ken give a lot of insight here. So I want to say just before we speak about next technology and next practices, best practices, the thing it's we still have a lot of issue for cross-border wealth management. So to invest money to different countries. So this is one of the biggest pain points that we have on the market right now. So Wealth Connect in GBA is one of the answers to bring Chinese assets to Hong Kong, but also to send money to China. The other thing is maybe, and it's more a question, how we can leverage on alternative data like social media, how your social media can help you to have a better way to understand your needs and invest. And the other question and open mark here can be, what about digital assets in the future? Maybe not a new technology, but a new application on how we can create new assets, leveraging on cryptocurrency, crypto custody, or even, you know, to invest on new product that we can have in the coming weeks or months.
Yeah, thank you so much. I want to thank each and every one of the panelists and King for putting all this together and our team at FinTech Association of Hong Kong as well. So thank you again, and thank you for tuning in. It's been really a pleasure, you know, having this discussion with you all.
Thank you very much.
Thank you.
Bye.
Bye.
All right, take care.